Hello ladies and gentlemen, in this tutorial we'll talk about a strategy called the beginning. It is interesting primarily because it is not based on the technical analysis as the majority of systems, but on sheer logic. Let's start with characteristics. The currency pairs which can be used in this strategy is Euro dollar and Australian dollar. Of course you can use it on other currency pairs, but the results are not as positive. Time frame is M30 and time of the trading once a day in early London session. Now you will understand the reason. So what our strategy is based on. As soon as London session is open in the first half hour, the market is formed by a large number of orders. Someone buys, someone sells, and together these orders give some momentum in the end. That is, the price goes either upwards or downwards. So our strategy is that we wait a half an hour after the opening of London, when this pool of traders is formed, and after the first M30 candle was closed, we enter the market, catch the momentum that has been formed and that will operate for a few hours. And once European traders will be preparing to leave for lunch and close some of their positions or stop active operations, then we will exit. As I said, we wait for the first 30 minutes after opening of London, and as soon as M30 candle is closed, we place the pending orders buy stop and sell stop at the points of 5 pips. 5 pips is optional. It may be 3 or 4 pips, it doesn't matter, above a high point and 5 pips below low point. So we place pending orders buy stop and sell stop just below and just above the extreme points of the first closed half hour candle after the opening of London. And we don't set take profit for these orders, and stop loss is at the level of the positive order for each pending order. For example, if stop loss is triggered with buying, we sell automatically and vice versa. As for the exit, then we will close our position and remove the pending orders that didn't work after 2.5 hours, when the traders either go for lunch and get ready to leave for lunch. Accordingly, they have the mood to work is lost, they begin to eliminate some large position or at least keys to make any active moments, for example actively buy or actively sell, and accordingly we exit the market at this time. Well, you can experiment with time of closure. We do not know exactly when with accuracy to the minute traders go to lunch, so you can add plus or minus half an hour to see what the results will be, but in my opinion 2.5 hours after the first half hour candle is closed after the opening of London is the best option. That is, we exit the market within 3 hours after the opening of London session. As for the recommended money management, then you can risk in the system a little more than in any other, since we had 2 orders, and as a rule, if one order brings a loss, then the second order is activated and placed, or they either break even point or profit overall. These loss-making days are pretty easy, so you can slightly increase the risk. I usually advise not to risk more than 1 or 3% in one trade, but you can risk a little more in this system and put 4 or even 5% in one trade. When is London open? When does London session that interests us start? Just go to the site forexmarkethours.com and find here such a table, and here we see session of London, New York, Sydney and Tokyo. Choose from the drop down list either your broker time or your local time as you prefer. Once you have selected the appropriate time zone, click go. The table will be reboot and the time that you tried to set should appear in the green rectangles. That is, your local time or the time of your broker which you have set should be the same time as the time that is indicated here in these green rectangles. And you see when London session starts depending on the time you have set, and that's the way you determine the exact time of the beginning of London session. Now let's look at some examples on the chart. Let's start right with a good example that demonstrates why we use exactly two orders and don't place any one order or market execution, watching where the price moves to. So the first half hour candle is closed after the opening of London. That's great. We place pending order buy stop just a few pips above the high point of this candle, and the pending order sell stop here just a few pips below the low point of this candle. Stop loss of sell order is that at level of buy orders, and stop loss of orders to buy is at the level of orders to sell. So the price moves downward at first, the order to sell is triggered, it is activated, and then the price immediately reverses and moves upward. A stop loss of the order to sell is triggered, and we lose here about 17 points, and simultaneously the order to buy is activated. We wait for 2.5 hours, that is 5 half-hour candles. 1, 2, 3, 4, 5. And when this bull candle is closed, we exit the market with a profit around 45 points. So we lost 17 pips with the first order, and we made 45 pips with the second order. Accordingly, 45 minus 17 will be 28 points. So we have earned 28 points despite the fact that our first order was closed with a loss. So initially we guessed wrong about the price movement. That's why we use two orders. And the second order allows us, if the first order is closed at a loss, to come at least to break even point, to reach at least zero, to offset the loss from the first order, or as in most cases, as in this case, even get some profit. So unprofitable days when we are closed in a negative are quite rare in this system. Well, let's look the second example. So next example, we also place pending orders just above and just below of the first closed half-hour candles after their opening of London. Well, here the price moves downward immediately. Our sell stop order is triggered, and after 2.5 hours, after 5.5 hour candles, we close with a profit about 1, 2, 3, 4, 5 about 50 points. If the candle is very big and stop loss is large, like in this example, it is permissible to set stop loss not at the level of the opposite order, but at the half of the candle. But we can set it in the cases when our first half hour candle stands out on the chart very much. For example, it is of a very large size. The next day, order to sell was activated, but the price was still in place. There were zigzag motions for 2.5 hours when we keep our trade open, and as a result we have earned anything and even lost about 5-6 points. Losses of course are insignificant, but it is worth considering that there will be the days sometimes when there will be something strange in the market, the absence of any movements, and you will have to close with a loss on such days. This is normal, you should take this into consideration. We moved to the next day, and the next day was more pleasant when we saw all the advantage of this strategy. As usual, half an hour after the opening of London session, we place a buy stop and sell stop order just below and just above the closed M30 candle, and the order to sell is triggered on the next candle. We wait for 5 candles here in this situation when good momentum is formed, and once the 5th candle is closed, it's here, we exit with a profit about 36 points. Well, I think the general principle is clear for you. I think it is clear why we use exactly 2 orders, because if stop loss is triggered on the first order, as a rule we will be in profit with the second order, and it will cover losses from the first order, and it often puts us in profit in the end also. Therefore, you will close the trade in the negative quite rare with this system, and if it happens, the losses are very small and the profits can be very impressive, of 50 or 60 points on certain days. Trading system, the beginning, in my opinion, is worth of attention, at least because it is based not on analysis but on the logic, on the behavior of the market, on the behavior of traders, and therefore this strategy has a good logical framework that will allow it to remain profitable until at least there is an established procedure for trading sessions. Don't let the high number of profitable trades and small losses to overshadow your mind. Don't risk a large percentage of your deposits. 3-4% per one trade is more than enough. Do not forget that Forex is not a casino, but a boring routine work. That's all. Thank you for your attention. Video was recorded specially for the website forextraderportal.com. Bye.